So now we will continue. So before the break, we were discussing about the new scheme which is given under section 115 BAC, which is available for individuals and HUF. So please be careful whenever the new scheme is applicable. We have to actually calculate the total income first, because normally the total income under the new scheme will be more when compared to old scheme, because various deductions and exemptions which are available under the old schemes are not available under the new scheme. So normally the total income under the new scheme will be more. So accordingly, on that total income, compute the tax rates, and the tax rates are kept lower under the new scheme. So that is the two things. Whenever the new scheme is available, we have to compute the income as per the new scheme without claiming certain deductions and exemptions, and on that total income we have to apply the new rates, guys. Clear? So in this table, come to this table, I have given some major differences between the old scheme and new scheme. So here you will get a clear cut clarity. Okay, what is the difference between new and old? Anta. Come to this table. So comparison of existing tax system, we call this as old system. Existing means whatever we have already covered previously. So we call that existing tax system with new optional tax system. We call this as new scheme, guys, because it will be for academic purpose, it will be easy for us to differentiate old and new. So that is why we call it as not existing, new and all. So old scheme, new scheme. Okay. For whom? Individuals and HUF. Chalo, one by one. What is the basic exemption limit under existing scheme? Normally 2,50,000, but for resident individual 60 or more, that is senior citizen, 3 lakh. Whereas for super senior citizen, 5 lakh, that is 80 or more. Whereas under the new scheme, it is always 2,50,000. Whether you are an individual or HUF, it is always 2,50,000. So please be careful. They may ask some MCQ question. For example, if Mr. A, aged 90 years, who is resident and opted for a new scheme, what is the basic exemption limit, guys? So they will give the option 2,50,000, 3 lakh, 5 lakh and nil or none of the above. So what will be your answer? What will be your answer? Good, Sushma. Others? Punit or Sushma, others? Come on, guys. Do respond, interact. 2,50,000. Very good. 2,50,000. So please be careful. MCQ question they can pick from anywhere. So be very clear with the provisions, guys. I repeat, if an individual who is a resident but 60 or more or 80 or more, even if they have opted for a new scheme, for them the basic exemption limit will not change. It will be 2,50,000. Fine? Okay, so next you can see only one exemption limit, 2,50,000 available irrespective of the age and residential status, because sometimes in the exam they will give unnecessary things in the question to confuse you only. So you guys make sure that you will not get confused. Now coming to special rates, will it change? No. Whatever special rates are covered under the special sections of Income Tax Act, that is 115 BB casual income, 112 long-term capital gain, 112A long-term capital gain on EFT 10%, then 111A short-term capital gain on EFT 15%. So all these rates will remain same under both. There is no change, nothing. Then rebate also is available under both the scheme. Then coming to chapter 6A deductions. Under chapter 6A, we have various deductions starting from section 80C to 80U, guys. Various deductions are there. But under old scheme, everything is available. Whereas under the new scheme, only 2 deductions are available. That means remaining deductions are not available under the new scheme. So only 80CCD2, there are totally 3 subsections there, but only one 80CCD subsection 2 deduction is available, plus 80JJAA. Only these 2 deductions are available under new scheme under chapter 6A. Yeah. Whereas remaining all deductions are not available. Coming to surcharge, it is same, no change with respect to that. Health and education cess also same. Then there are various other deductions and exemptions which we calculate chapter wise, that is heads of income wise. Under old scheme, everything is available. Whereas under a new scheme, most of them are not available. Most of them are not available. What are they? We will learn eights wise, guys. That is, when we are learning each eights of income, I would be covering it. Next, so next also with respect to set off and carry forward of losses and depreciation from past previous year. So under new scheme, sorry, under old scheme, there is no restrictions, nothing. But under new scheme, if any loss or depreciation, if it is related to the deduction which is not allowed under the new scheme, you cannot carry forward it. You cannot carry forward it. Same way, set off of current year loss. See, normally if there is any current year loss, under old scheme, we can set it off. Either under the same head, or even we can set it off against other rates of income. Whereas under the new scheme, if you have any loss under the head house property, you cannot set off that loss against other rates. Other rates. I repeat, under old scheme, if there is any house property loss which is related to current year, you can set it off against other rates also, like salary income, business income, you can set it off. But under the new scheme, you cannot do that. So house property loss can be adjusted only against house property income, because under new scheme, it is not allowed to be adjusted against other income. Clear? So this 2 point means whatever deductions, exemption and this losses points also, we will again cover it when we go to that chapter, guys, because we, as of now, we don't have much idea about house property loss and all. So when we go to that particular head, it is a second head of income, house property, I will be covering it there also. Next, intimation. When should I intimate? If I am following old scheme, no need to inform, no need to intimate. But if I am opting for a new scheme, assessee can opt for the new scheme only after the intimation. There also two categories there. If I don't have any business or professional income, I can intimate while I am filing my income tax return. There only I can choose it. Sir, what if I have business or professional income? You have to inform well before. Before you are filing your income tax returns, you have to intimate the department. Yeah. Yes. Next, coming to provisions of AMT. AMT means alternate minimum tax. Alternate minimum tax. It is always applicable under old scheme, whereas under new scheme, it is not applicable, guys. Clear? And that too, under the old scheme, when it is applicable, what is the rate, what is that exactly, we'll be learning in chapter 10, all about alternate minimum tax. There is two special provisions, alternate minimum tax, and for companies, there is something called as minimum alternate tax. We will learn this in chapter 10 and 11 respectively at the end. Clear? Yes, sir. And one important thing with respect to this new schemes, what are the exemptions, deductions which are not available under new scheme, plus there is some restrictions with respect to losses and all. All this we will learn chapter wise, guys. Whenever I go to that particular topic, I would be covering it. So don't worry about that much as of today, as on today. Chalo. Hope you guys are clear with respect to whatever we have covered till now. Any doubt you guys can ask, or else we will go to the problem. House property loss I will be covering, Madam Pragya Singh. When I go to that particular head, we will be doing it. Come to the second problem. Come to question number 2. Intimation, sir, once again. See, intimation, whether you are following the old scheme or new scheme, especially if you are following new scheme, you have to intimate the department, that is income tax department. Now there two categories are there. Do you have, means individual or HUF, do you have business income or professional income? If yes, before filing your income tax returns, you have to intimate the department. There are some due dates to file income tax returns. Within that due date, you have to intimate the department, whether you are opting for new scheme or not. Okay. Sir, what if I don't have business or professional income? Then while I am filing my income tax return, there only I can choose whether I am following old or new. Whether I am following old or new. Next, Viren, sir, page number. Someone help me with the page number for this question? 45, sir. Viren. Yeah. Chalo guys, question number 2. Mr. A, aged below 60 years, has derived a total income of 14,25,000 for the financial year 21-22. Compute his tax liability for assessment year 22-23 if option 1. Assessee has not opted for section 115 BAC. That means he is following which scheme? Come on guys, he is following old scheme. If he is not following new scheme, means obviously it is understood that he is following old scheme, or we call it as existing scheme also. Okay. Next, option 2. Assessee has opted for section 115 BAC. That means he has opted for new scheme. One important thing here is, please listen, they have given in the question that total income is 14,25,000. So for practice sake, what we will do in this question is, we will take same total income under both old scheme and new scheme, guys. Clear? But it will not be same. In reality, both the total income under the old scheme and new scheme will never be the same, because there are certain deductions and exemptions which are not available under new scheme. But as of now, we don't know what are those deductions, what are those exemptions which are not available on that. That is why I'm not doing that part. What we will assume here for this question, it is 14,25,000 under both scheme. It is 14,25,000 total income under the both scheme, and we will calculate the tax liability. We will calculate the tax liability. Hope you guys got my point. Clear? So it will not be same. I'm telling that it won't be same, but only for this question, just to calculate the tax liability, we will assume that it is same under both old and new scheme, and we will compute it, guys. Clear? Yes. Chalo. Option 1, that is old scheme. You can just give the heading old scheme. Total income is 14,25,000. So we have to apply slab rates. So basic essential limit is 2.5 lakh. So up to 2.5 lakh, nil. The rate is also nil. The amount is also nil. Then 2.5 lakh to 5 lakh, 5%. So 5 lakh minus 2.5 lakh into 5%. 12,500. Next, 5 lakh to 10 lakh, 20%. So find out the difference. 10 lakh minus 5 lakh into 20%. So that comes to 1 lakh. 1 lakh. Then more than 10 lakh, 30%. So how much is his income? 1425. So 14.25 minus 10 lakh into 30%. So that means 4,25,000 into 30%. 4,25,000 into 30%, which will give you 1,27,500. 1,27,500. So 240 na total 2,40,000. 2,40,000. I can call this as gross tax liability. 2,40,000 gross tax liability. Arvind Rajan, clear, sir? Yeah. Next, check step by step. Is rebate available? No, sir, because total income is more than 5 lakh. Then check surcharge. Is it applicable here? No, sir, because total income is less than 50 lakh. So both are not applicable. So straight away go to health and education cess. So how much is that? 2,40,000 into 4%. So how much is that? Arvind Rajan? 9,600. So 2,49,600 is the final tax liability under old scheme. Under old scheme. Take down quickly. See, now do all this procedure, guys. In the exam and all, you can do direct calculations. Means you need not show step calculations and all. You need to just choose the correct options. But here, for your understanding, I'm doing it step by step. Punita sir, can you show the question? Why you don't have question? I have told you number of times, guys, please do have an hard copy. because many things we are making note in the study material. I don't know why you are asking, but still. Madam, please do have mine, our material. We are not doing it from institute study material, na? So you have to have this. Come on, without this, you will not be able to follow the class. I'm keep on telling it. Without the study material, you definitely will not be able to follow the class. And that too hard copy. Please do have an hard copy of it. Take a printout if you still don't have. Yeah. Chalo, we'll go to option 2. Option 2. So under option 2, the tax rates will change. Be careful with that. So option 2, new scheme. Okay. Up to 2.5 lakh, nil. So amount also will be nil. Then 2.5 lakh to 5 lakh, 5%. It will be 12,500. Same amount will remain same. Let me show also. 5 lakh minus 2.5 lakh into 5%. Into 5%. Shreya, more than enough, madam. I have spoke about this before I started my class in the first class. Yeah, more than 5 lakh up to 7.5 lakh, the tax rate is 10%. So 7.5 lakh minus 5 lakh into 10%. So again, it is 25,000. 2 lakh 50 into 10%. Then 7.5 lakh to 12.5 lakh, 15%. So where is some one thing in between is missing? Just a second. Up to 10 lakh is missing. This should be up to 10 lakh. Yeah. Yes, let us continue. So 7.5 lakh to 10 lakh, tax rate is 15%. So the difference is 2.5 lakh. You will get 37,500. Okay. Next, 10 lakh to 12.5 lakh, it is 20%. For easy to remember, guys. For every increase in total income by 2 lakh 50,000, the tax rate will increase by 5%. Chalo. So now 12.5 lakh minus 10 lakh into 20%. So it will give you 50,000. That is 2.5 lakh into 20% will give you 50,000. Last one. More than 12.5 lakh, the tax rate is 25%. Sir, why you are stopping here? Because my total income is 14 lakh 25,000. So let me calculate the difference. 14 lakh 25 lakh, sorry, 40 lakh 25,000 minus 12.5 lakh into 25%. Into 25%. So how much is this figure? 43,750. Hope you guys got this. If any doubt, please do ask. 750. 43,750. And please guys, I request you, whenever we are doing the problem, all this calculation, you guys do it manually. Don't just to take down whatever I am doing here, because you guys should get practice of how we are doing it, or else you will never get it. If you are just taking down thinking that I understood and you are just copying down the answer, means it won't be helpful. Please do. You guys also work it in your calculator. So gross tax liability is 1,68,750. 1,68,750. Next, check rebate. Is it available? No, sir. Total income more than 5 lakh. Is surcharge applicable? No, sir. Because total income less than 50 lakh. So both are not applicable. Straight away go to health and education cess. 1,68,750 into 4%. How much is this? 6750. 6750. So how much is that? Total figure. 1,75,500. So final tax payable is 1,75,500. Please do take it. This is under new scheme. This is under new scheme. Chalo, fine. Third one we have already done. We'll get back. Get back to provisions. Yeah. Now we have covered some new schemes, guys. What are those till now? BAA and BAB gives new schemes for domestic company. In detail about this, we will be covering in chapter 11. Okay. Now with respect to individuals and HUF, there is one new scheme called 115 BAC. Okay. Same way for a cooperative society also, there is a new scheme under section BAD. Bad. For cooperative society, there is a new scheme called it is covered under section 115 BAD. Clear? So here what is applicable? See, what is the tax rates applicable for cooperative society? That is the normal tax rates. Slab rate. That is up to 10,000, 10%. 10,000 to 20,000, 20%. More than 20,000, 30%. This is the tax rate applicable for cooperative society under the existing scheme or old scheme. But under the new scheme, they have kept the flat rate. They have kept it as flat rate. But again, here also they have told, if the cooperative society is opting for a new scheme, they have to forego certain exemptions and deductions. Sir, what are those exemptions and deductions? It is as same as 115 BAC deductions and exemptions, which has to be foregone by the individuals and HUF. While calculating the total income under the new scheme for individuals and HUF, they have to forego certain deductions and exemptions. So same deductions and exemptions has to be foregone by the cooperative society, while if they are following the new scheme. Clear? So what does 115 BAD speaks about? We will see it. Special tax regime applicable to cooperative society, BAD, bad. So BA series talks about all the new scheme, guys. That is 115 BA series. Okay, even this was added by Finance Act 2020. Finance Act 2020 has inserted a new section 115 BAD in Income Tax Act to provide an option. This again, even this is an option to whom? Resident cooperative society. Very important. So, sir, what if the cooperative society is a non-resident? For them, this option itself is not available. This option itself is not available. Okay. To get taxed at the rate of 22% income tax rate, flat rate, fixed, plus surcharge is also 10% fixed, no change, and it is not depending upon your income. Even if the total income of cooperative society is 5,000, 10,000, 5 lakh, 5 crore, 10 crore, whatever it is, surcharge is 10% fixed under the new scheme, guys. Clear? So please be careful here. And 4% cess always. So what is the tax rate applicable for a resident cooperative society under the new scheme means 22% income tax rate, okay, plus 10% surcharge always, irrespective of their income, plus 4% health and education cess in all the scenarios. Clear? Yes, because you may expect one theory question here. They may ask question on the tax rates. Be careful. The resident cooperative society have an option to opt for taxation under the new section, that is 115 BAD of the Act, with effect from assessment year 21-22. The option once exercised under this section cannot be subsequently withdrawn for the same or any other previous year. That is, once you go under the new scheme, again you cannot change it for your lifetime. You cannot change it for your lifetime. Okay. Next, if the new regime or new scheme of section 115 BAD is opted by a cooperative society, its income shall be computed without providing for specified exemption, deductions or incentive available under the act. So even for them, the few deductions and exemptions which are available for the cooperative society which is opting for old scheme is not available if they opt for new scheme. Next, the societies opting for this section have been kept out of the purview of alternate minimum tax. So the alternate minimum tax is a special provision. It is applicable for cooperative society if they are opting for old scheme. Sir, what if the cooperative society is opting for a new scheme? For them, nothing relating to AMT is applicable, guys. Same thing was there even for individual and HUF also. Agree, if they opt for new scheme, AMT is not applicable. Same story here also. Same story here also. Next, the option to pay tax at lower rates shall be available only if the total income of the cooperative society is computed without claiming the following exemptions and deductions. And which are those? Again, we will learn it chapter wise, because all this list I will be covering it, because if I start telling about this now, we don't have any idea about all these items. So we will be covering this in the particular chapter, guys. Once we cover all the chapter, you will have an idea about, okay, what is all about this deductions, exemptions and all. So you can remember one thing, shortcut, most of them covered here is whatever is not available even for individuals and HUF under section BAC, 115 BAC. Clear? Yes, sir. So at the end, we have one more paragraph. This with respect to losses. Where a cooperative society exercises option for availing benefit of lower tax, that is new scheme, under section 115 BAD, it shall not be allowed to claim set off of any brought forward losses or depreciation attributable to any restricted exemption or deduction in the assessment year for which the option has been exercised and for any subsequent assessment year. See, if the assessee have any loss relating to the deductions which are not available, so these are the deductions which are not available for cooperative society who is opting for new scheme. So if the assessee have any loss relating to deductions, he cannot carry forward that loss for the future years, and he cannot adjust that loss also against any other income. Normally, if you have any loss, you can adjust it against other income. If you don't have any other income, you can carry forward it to the next year under old scheme. But under new scheme, if the loss is relating to any of these deductions which is not available for a new scheme, then even that loss you cannot set off against other income. You cannot carry forward also it for the future. This same point is actually applicable for the individuals and HUF also who has opted for new scheme. Yeah. So with respect to this deductions, losses and all, we will again cover when we go to that particular topic, guys, because as of now we don't know how do we set off the loss, when we can set off the loss, is there any restrictions, conditions and all. Once we study that, okay, there I will tell this cannot be done under the new scheme, so that it will be easy for you to understand. Fine. Chalo. Sir, new scheme is basically 115 BAC, right? That is only for individuals and HUF. For cooperative society, it is under section 115 BAD. See, all these sections were added by Finance Act 2020, new sections. Agree? So BAC is for individuals and HUF, BAD is for cooperative society, whereas for domestic company, BAA and BAB. BAA and BAB. All these are new sections which are talking about the new schemes which was added by Finance Act 2020. Next. So what about the limits in that? So what about the limits in that means? I didn't get your question. Ganeshan. Sir, in new scheme, the losses will be set off in that year itself is right, sir? See, only for example, assume, sir. Let me take one example. Even Purvi Chopra, I guess she asked one doubt. So now assume in previous year 2021. in previous year 2021, you are prepared, you have business income, so you have prepared your P&L account. So sales, I'm just giving a rough P&L account. Sales is 10 lakh. Okay. And you have claimed a deduction salary. Salary 5 lakh. Okay. Then some of the deduction I will take it from your scientific research. Scientific research. Okay. I will take this. So the scientific research deduction, what is this and all? Don't worry, because we are yet to cover this. Scientific research expenditure, I am claiming a deduction. How much? Assume 10 lakh. I have claimed 10 lakh deduction. So you have a loss of 5 lakh. You have a loss of 5 lakh. Okay, sir. Now, assume in previous year 21-22. In previous year 21-22, you are opting for, in 2021, you were under old scheme. That is why this deduction was allowed for you. Now, in previous year 21-22, you are opting for a new scheme. Okay, sir. Now, assume this loss you are not adjusted in the last year, means there was no other income for you, so you are not adjusted it. So what if there is any loss, you will carry forward it to the next year, which cannot be adjusted in that year, you will carry forward it to the next year. Okay, in next year, that is previous year 21-22, you have opted for a new scheme. Okay, now assume in this new scheme you have a sales of 15 lakh. Okay, salary 7 lakh. Can I claim scientific research expenditure in this year? No, because that deduction is not allowed. That deduction is not allowed under the new scheme. That means you cannot claim. Even if you have incurred scientific research related expenditure and all, you cannot claim. Okay, sir. So how much profit you have? 15 minus 7, profit you have 8 lakh. Hope you guys are clear. Yes, sir. Normally, what you can do is, whatever loss you have last year, you can adjust that 5 lakh loss against this 8 lakh. But this loss is related to what? The deductions which you have claimed. Scientific research deduction you have claimed last year 10 lakh. But that is not allowed under the new scheme. That is not allowed under the new scheme. That means this loss cannot be adjusted once you have come under the new scheme. Once you have come under the new scheme. Even in previous year 21-22, if you were under the old scheme, then this loss was supposed to be adjusted. You can adjust this loss. But in previous year 21-22, you have opted for new scheme. And any loss in the past years which is related to the deductions which are not available under the new scheme, you cannot adjust that loss and you cannot carry forward that loss also. Even for 22-23 also, you cannot carry forward. In simple, this loss will become lapse. This loss will become lapse. Yeah. So same scenario. It is applicable for individuals and HUF also, for as well as cooperative society. Even scientific research deduction is blocked even for individual and HUF under BAC. Same rule is applicable even if the individual and HUF, if they have opted for 115 BAC. Clear? So there also same condition is there, guys. Clear, madam? Shreya? Hope it is clear for you. I was actually supposed to cover this in last chapter, but still, as doubt was asked, I have covered it here only. Yeah, many other things are there with respect to losses and all, like how we can adjust, how many years we can carry forward this. Everything we'll be learning. We have a separate chapter for this, loss chapter, set off and carry forward of losses. Yeah, hope everything is clear till now. So this is same for both. That is 115 BAC or 115 BAD. Clear? Yes, sir. So we are done with this new scheme also. The new scheme applicable for cooperative society is not so important, but BSc, individuals and HF, very, very important. In other chapters also, we'll be seeing that sections. Clear? So please be very careful, that very, very important. You can also mark a star there. Where is that? New scheme for individuals and HUF. Yeah, this one. This is important. Yeah. Next, we'll go to next topic. Drishya. Sir, in new scheme in the cooperative society, what are the slab rates? There is no slab rate. Na? Rate itself is fixed. It's a flat rate, 22%. That is what we discussed. Drishya. There is no slab rate and all. 22 is a flat income tax rate plus surcharge always 10% plus 4%. Health and education cess also always 4%. Under old scheme it is slab. Under old scheme it is slab. So please be careful. Yeah. Next, there is something called as section 288A and 288B, which is speaking about rounding off. See, whenever you compute total income, see in this chapter we are learning about how to calculate tax liability. In the coming chapter, that is from third chapter, we will start computing total income. Under each head, how to compute income under salary head, house property head, PGBP, capital gains, income from other sources. One by one, we will be learning. Agree? So, whenever you compute total income on which you are liable to pay tax, the total income figure has to be rounded off to the nearest 10 rupees, guys. Nearest 10 rupees means if it is 5 or more, if the last digit is 5 or more, round it off to next 10. If it is less than 10, sorry, if it is less than 5, round it off to the previous 10. For example, let me take a rough figures. Now, assume my total income after computation everything, I got 10,68,720. 725. I have to round it off to 730, guys. I have to round it off to 730. 5 or more, next 10. Same way, assume I got 11,72,722. 722. In that case, I will round it off to 720. Less than 5 means previous 10. Clear? Same way, let me take one more figure quickly. 9,69,699. 699. In that case, I will round it off to 700. I will round it off to 700. Hope you guys got it. So whenever you compute total income, it has to be rounded off to the nearest 10 rupees as per section 288A. And once we calculate total income, on this, whatever tax rate is applicable for me, I will apply that and I will compute tax liability. Agree, na? I will compute tax liability, deciding whether surcharge is applicable for me, rebate is applicable for me, whatever. And the final tax liability you will get now, that is final tax figure, whichever I am supposed to pay to the government, even that has to be rounded off to the nearest 10 rupees as per section 288B. 288B. For example, assume final tax liability, guys. So please be careful. Don't round off gross tax liability and all. Final tax liability, that is after health and education says whatever final figure you will get, that you have to round off. Okay. So under section 288B, they are telling round off the final tax liability to the nearest 10 rupees. Assume the final tax liability you got 1,68,721. You will round it off to 720. You will round it off to 720. Clear? Yes. Next, Viren, you will answer this. You will answer this. Sir, my tax liability is 1,28,424. I will round it off to Viren. I will round it off to, come on, 420. No, I didn't ask who are you. I asked what is the amount you will round it off to. Oh, it's that itself is 420. Okay. 420. So less than 5 means it is always previous 10. Okay, same way, let me take 1,28,428. 428. You have to round it off to 430. 430. Hope you guys are fine with this. Clear? So please be careful. 288A will tell round off the total income to the nearest 10 rupees. And 288B will tell round off the final tax liability or your tax liability in simple to the nearest 10 rupees. And easy to remember, guys, A will always come before B, na? So total income should be there first. Then only I can calculate my tax liability. So 288A is applicable on total income. 288B is applicable on tax liability. First total income always. Then only tax. Without total income, I will not be able to calculate my tax liability. Correct now, madam, sweetie? Yes, chalo. Next, the amount of total income computed in accordance with the provisions of the Act shall be rounded off to the nearest multiple of 10 rupees. They are asking question on this, guys. So if they ask question on this, you are the luckiest guys. The total income has to be rounded off to dash nearest to 10 rupees, nearest 100 rupees, nearest to rupee, none of the above. Options will be like this. Clear? So it is nearest 10 rupees. For this purpose, paisa shall be ignored and 5 and above shall be rounded off to next multiple of 10. Same way, coming to 288B, rounding off of tax payable and refund due. Means if I have already paid more tax, whatever excess tax I have paid, I will be getting a refund of it. Even that will be rounded off to nearest 10 rupees. Now, any amount of tax payable or refund due under the provisions of Income Tax Act shall be rounded off again to the nearest 10 rupees. And please be careful, this rounding off is to the final figure, to the final tax figure. Fine. So now this we will just quickly go through this format, guys. We have already done this. I had done it before I started with this chapter. But now, as we know all the tax rates, we'll just quickly go through it now. So focus here, just another 2 minutes. Whenever we are calculating the tax liability, total income will be given in the question. Okay. So check first whether the total income includes any special income. If yes, divide the total income into two parts. Special income, normal income. And you should be knowing what is the tax rates applicable for special income as well as the normal rate applicable for normal income. You have to know because they will not give that in the exam. So if there is any special income, first bring it, check what is that special income, where it is covered, what is the tax rate applicable, first calculate the tax on that. Okay, sir. Next, normal income, or we call it as balance income. Either slab or flat rate would be applicable, and it also depends whether the assessee has opted for old scheme or new scheme. Please be careful with that also. Okay, calculate that. Then you will get you add up both, you will get one figure. Check whether the individual, only for individual, rebate is available under section 87A. That too if he is a resident individual and total income is up to 5 lakh. If rebate is available, reduce the rebate, but maximum 12,500. Please take care of it. Then tax liability after rebate. Then check whether surcharge is applicable. Surcharge and rebate both cannot come in the same situation, guys. Okay. Check whether surcharge is applicable. Surcharge would be applicable only if the total income crosses certain limits like 50 lakh, 1 crore, 2 crore like that. So check if surcharge is applicable. If yes, then calculate that on the tax figure. And obviously, this surcharge will be calculated on this figure. On this figure, because when surcharge is applicable, rebate will not come. Rebate will definitely not come. Sir, then why you are given in this format is, see in this format, everything I have given from the starting to end. That doesn't mean that in every problem, everything will come on. Yeah. So this is the maximum thing and how the procedure to calculate tax I have given in this format, guys. Clear? Yes, sir. So once surcharge is applicable, if applicable, you calculate it on what? Gross tax liability. Fine. Then after surcharge, health and education cess is always applicable, guys. It is always applicable. Whoever is liable to pay tax, for them, always health and education cess at 4%. And please be careful. If by chance, if they ask any question on the rate, if the question is, what is the rate of health and education cess? Your answer should be 4%. Your answer should be 4%. If the question is, what is the rate of health cess? If they just ask, what is the rate of health cess? What should be your answer, guys? 1%. 1%. Because see, all these simple things, sometimes we will feel like they may not ask anta. In some exams, they're asking it. Really. In fact, they're asking it some simple questions like this. Next, what if they ask, what is the rate of higher and secondary cess? Higher and secondary education cess? It is 1%. Clear? If they just ask, what is the rate of education cess as a whole? It should be 3%. It should be 3%. Clear? So please take care of it. If it is a theory question. Next, so after adding health and education cess, you will get tax liability. This is actually what you have to pay to the government. This is what you are supposed to pay to the government. But there are certain adjustments which I may make on this. That is, if I don't pay tax on time or if I don't file returns on time, then I may end up paying some interest under section 234 ABC. Okay, so how is that, what is that and all, we will take care later. So we have to add interest. If I am liable, I need not pay it every time. Only if I don't pay tax on time or if I don't file returns on time, then only interest would be applicable. So add that interest, you will get tax liability. And if you have already paid any tax in the form of TDS, that is tax deducted or source, we discussed this. Agree? If any TDS is deducted on your income by the payer, you can take the credit of that while you are paying the tax liability. So you can reduce that. Same way, if you have already paid some tax in advance, or if you have already paid any tax, self-assessment tax, we call it as SAT in short, reduce that. Even if you are eligible for any double taxation relief, we discussed this also. That is, if you are an ordinary resident, global income is taxable, but if you, for the income which you have already earned and paid tax in some other foreign country, you have to consider that while calculating the total income. But in tax liability, you will get some relief. That is, whatever tax you have paid in that foreign country, you will get a relief for that. Yeah. So after claiming all this, final tax payable, and if by chance if this figure is negative, means you already paid more tax. That is TDS, advance tax, whatever you have paid. If it is already more, whatever figure you have paid more, you will get a refund of it. You will get a refund of this. So if this figure is negative, we call that as refund. And if this figure is positive, that figure we need to pay to the government. Clear? So you don't worry much about this part, second part and all. So till here we are covered in this chapter, guys. Till here, that is tax liability, which is nothing but my final tax liability, which I am supposed to pay to the government. With respect to interest, that this and all, we will take care in the later chapters. SAT means self-assessment tax. That is, I myself calculate my income, I myself calculate my tax liability and pay it. Sir, what is higher and secondary education cess? It is collected for the purpose of meeting higher education. Means after 10th, even in some government schools, even high school, and also +1, +2 or PUC is also given free of cost in government schools and colleges. To meet that expenditure, the government is collecting in the form of higher and secondary cess. Higher and secondary cess. Sitara. Yes, guys. So fine. So we have discussed, and special tax rates. So we have discussed in the first step itself, special income taxable at special rate. And what are those special income? I have given here, which we already covered. Long-term capital gain in excess of 1 lakh at 10% under section 112A, or other long-term capital gain which is taxable at 20% under section 112. Then casual income which is taxable at 30% under section 115BB. Then short-term capital gains on security transaction tax paid securities at 15% under section 111A. Please mention here only SFT. Only if the asset is SFT, that is EFT, not SFT. Shares, okay, EFT or SFT, one on the same. Let me take EFT only, not SFT, because E means equity share or S means only shares. So let me mention E only. So EFT means equity shares, equity oriented fund, and last one is units of business trust. Only for these three assets, the 111A section is applicable. Whereas for all other short-term capital gain, it is not a special income. Normal rates are applicable. Clear, guys? So we'll stop it here. We have some more things to discuss in this chapter. We will do it in the evening class. In the evening class, we will finish this chapter, do the revision, and get into the heads of income. That is the most important and challenging chapter. Fine. Sir, full form of EFT. I gave this short form, na? That is equity shares, the equity oriented fund, and units of business trust. Clear? We have given it here. Just a second for those who still have confusion. Come to the special income part. Here I have given. So this, for this three assets, whichever is mentioned in bullet point, in short we call it as EFT. Pragya Singh. Fine. Fine, guys. So bye for now. Have a nice day. Take care. Enjoy, guys.